Thank you, Anavi. I'm really pleased to be here on behalf of the iSPIRT Foundation. Um, Formal lending in our country tends to be collateral based, large ticket, and long tenure. And this is one of the greatest challenges for our country to solve is to democratize formal lending and to move this from being largely to large corporations and large companies, whereas the bulk of the market and the bulk of the small enterprises in this country require small ticket, short tenure, high frequency loans to work themselves into prosperity. This requires a whole of society approach. Specifically, it requires policymakers, market innovators, and what is special about India, digital public infra providers to come together to solve for this need in the market. I will take the next 15 minutes to describe what I think are exciting developments in the public digital infra space so that lenders and fintechs and borrowers can all move us closer to democratizing credit in India. For that, let me just go over some of the digital public infra that is already present in India right now. And it is popularly known as the India Stack. There are many public presentations about this, which I encourage our audience to go and look at on the iSPIRT website and on the indiastack.org website. It is basically has three foundational layers. The identity layer, where almost 1.3 billion Indians now have an Aadhaar ID, a digital ID that gives them the ability to say, I am who I claim to be, and use it to obtain services like opening a bank account, like getting a telephone number, and so on. The second layer is a payments layer, which allows anyone to pay anyone else in a safe, secure, convenient, and fast way. And its most popular implementation is the UPI, which does now about a little more than a billion transactions a month, and they're well on their way to doing a billion transactions a day. The most recent layer of the India stack is the data layer that allows every citizen to control how their data is used. And in a country where there are many small enterprises, you can think of these enterprises using data about themselves to access services that are useful to them, like maybe a loan, maybe insurance, maybe some advisory, maybe to share skills that they have, and so on and so forth. I'm sorry, I didn't flip this slide, but my comments were on this slide. I'll just let it stay here so that you can take in the three layers of the India stack: the identity layer, the payments layer, and the data layer. And the India stack forms a foundation and has many use cases. And you will see many of them actually in the newspapers around since COVID has started, certainly. The direct benefits transfer program has picked up immensely. It was already doing the world's largest direct benefits program, but in COVID has essentially hastened or increased the volume of benefits going through that. A large number of accounts were opened using the India Stack infrastructure and the Jan Dhan Yojana. You can see use cases in insurance, you can see use cases in cashless transactions, and the one that I want to talk about today is the use case of lending. And this is a popular one for iSPIRT. We've been talking about this since I think maybe 2013 or 2014. And let me just spend a moment to talk about Rajni, one of the small enterprises I talked to you about at the beginning, and understand the kind of credit products that she needs. She needs a loan. She needs a small ticket loan that she needs to be able to return in a matter of days, if not, and certainly not, long years as the current market products are. Let's go through her needs. In an India stack enabled world, she would want a loan. She would share her data. She sees various loan offers competing for her business. She accepts what she thinks is the best offer. The money gets disbursed into her account. She uses that money to sell the goods and services she wants to. And she has the ability to repay the loan at the end of the day, a couple of days, whatever the product that the market innovator is choosing to provide to her at that moment. To enable this to happen, to enable this to happen, you essentially need public digital infrastructure to fall in place, as well as private innovators to solve for the specific needs of Rajni. And you can see here the outer layer is the entire public digital infrastructure that's in place right now. And what I will talk about later today is the Open Credit Enablement Network, what we call Oaken, that will further enable us towards democratizing credit in this country. The middle layer is where the market innovators are essentially enabled or to provide those services to customers like Rajni. So that sets it up for you where our view of solving for credit, for democratizing credit in India, requires public digital infrastructure to be in place to enable private innovators to create specific products for the diverse customer base that is there in India right now. Let's go back to 4 years ago when such products were actually imagined by large, this is a real case, but a large public sector bank in India imagined such products and sanction, they made it very easy to process, very convenient for borrowers to access it. They worked with partners to provide these loans to these drivers of a cab aggregator company. And it was quite impressive in that time. 27 loans were sanctioned within 30 seconds. And then what happened? The product failed because of high NPAs. And it was probably a little bit ahead of its time, given what was the infrastructure available to lenders and borrowers at the time. What was then true was that borrowers ran a largely cash business. They could not, lenders could not monitor this business. And lenders could certainly not influence the credit behavior of these borrowers. And what did that lead to? It typically kept financial institutions, the same formal financial institutions that we talked about in the beginning, it prevented them with three challenges. One, it was unable to discover creditworthy borrowers at a reasonable cost. The cost of borrower acquisition was very high. Two, they didn't have access to trustworthy data in a manner that they could actually price the risk and therefore the interest rate of the credit they were offered. And three, lending is said to be a business of collections, and they did not have an ability to collect those repayments in a timely manner. And what was the result? Essentially, what happened as market was not able to deliver credit to anything more than, let's say, 10% of, let's say, a specific segment of the MSME market, if you will. A large part of the market was excluded from having access to these kinds of products that they needed. Consider for a moment if we were able to introduce between the lender and the borrower a set of borrower facing marketplaces or service providers. They're not just another layer, but here's what they actually bring to the entire lending construct and the lending journey between the lender and the borrower who needs a small ticket, short tenure, and high frequency loan. Here, the borrower facing marketplace or the service provider is actually within the context of the borrower's daily activity and daily business. They are in the best place to know the health of the borrowers life and business. So think about a food delivery aggregator marketplace, or think about a e-commerce aggregator of small businesses. Think about the aggregators of cab drivers. These entities are in the best position to understand the health, the behavior, and more importantly, the needs of these small enterprises. If you put them in the middle of the lending cycle, what happens? The cost of borrower acquisition goes down for the lender. The lender is able to, through the data layer of India Stack, specifically known as the account aggregator framework, the lender is able to access trustworthy data about the borrower from the borrower, and it's able to use the payments layer and other payment systems to be able to collect on that loan when the borrower is ready to make the payment. But the question remains, is this is all good between one lender and one aggregator and its set of borrowers. How does this scale to address the diverse needs of all borrowers in India? Because custom integrations and manual processes with every financial institution has proven to be a humongous task. There are high turnaround times for loans to get deposited. And more fundamentally, the products that are available to these borrowers are largely designed by the constraints that the lenders face on cost and ability to price risk. So, in other words, in cost and in access to trustworthy data. This is where we bring in the notion of a common language between all lenders and all such borrower facing marketplaces, or what we begin to call the loan service providers. This is called Oaken. Sorry. The Open Credit Enablement Network allows the lenders and the loan service providers to have a common language. One implementation allows access to the entire network of financial institutions. And what does this do? It allows many lenders, remember, go back to the Rajni use case, it has many lenders who are competing for her business. There are many loan service providers, one of which, or two of which, or a few of which can access very different cohorts of the Indian economy and ecosystem. And once these borrowers are able to share data about themselves, and once the loan service provider is integrated using the Oaken APIs, they are able to access formal financing from a range of lenders. So this is our vision for how this credit will scale to all the small enterprises in a way that delivers them short tenure, low ticket, high frequency loans. And when you think about what the loan service provider does in this entire construct, it is very different from the existing model of a direct sourcing agent, which is usually the agent of the lender. Here, the loan service provider is an agent of the borrower. And here, the loan service provider takes on the onus of educating its customer of various credit offerings, also in places enabling the customer to access lower interest rates, and many more such value added services. It is in the interest of the loan service provider to have high customer retention, and they are able to offer credit as a value added service to their customers. So, riding on a range of loan service providers, formal financial institutions who have, for in our case, banks and NBFCs, who have the lowest cost of capital in the system can finally reach the credit products they need to reach to the borrowers through loan service providers by using the Oaken APIs. This allows the LSP to provide the right types of products, and it allows the lenders to have lower cost of operations and a better ability to price risk. So here is the transformation that we will be finally able to make. We will move away from a collateralized balance sheet based assessment to a more cash flow data driven assessment of the borrower, which itself improves access to credit for millions of borrowers in this country who do not have collateral to offer against their loan. It moves from having a manually intervention process of the entire loan journey to a 100% digital journey. Again, the removal of friction in all the small enterprises who want to get a loan today will again will release another layer of access to these borrowers. And what is very pertinent is that instead of the lenders designing products that are driven mostly around the constraints of their cost structures, you now have loan service providers who are able to provide a wide array of loan products that are best suited for the segment of customers that they are serving. And this allows us to have a high volume, low value loan business for lenders to take on. In such a world, we imagine that the lending value chain will emerge with 8 such players. There will be, of course, the lenders, and the bottom half of this is all the regulated players, the lenders, the credit bureaus, the UPI players, and account aggregators. And the loan service providers, the data providers, which we imagine will now emerge in such a data-rich, data-based lending ecosystem, and emergence of a new entity, who are the underwriting modelers of such loan products. We've seen this happen before. We see that in India, dramatic change happens when 3 things come together. We've seen, for the large part of my talk today, I've focused on all the public infrastructure that's in place to enable this. Policy is falling in place, specifically with the account aggregator going live and the UK Zinnov committee accepting the entire construct of the loan service provider. And I'm happy to report that many of the nation's largest banks and more than 30 customer-facing entities are now engaged in adopting Oaken. So we believe we are on the cusp of democratizing credit in India, and this is how that new ecosystem looks. With lenders and LSPs both using Oaken, and borrowers being able to access the specific types of products they need through market innovators and actually be able to have affordable and accessible credit. That brings me to the end of my talk. I just want to say a little bit about the foundation that I work at. iSPIRT is a non-profit think tank, and it focuses on, right now, financial inclusion in India and health inclusion. And it is run by what we call a no greed and no glory volunteering mindset. So you will not see iSPIRT anywhere in all of this. You will hopefully see more and more market innovators leading this change. Thank you.
Hi, Meghna. Before we let you go, we've had a flurry of questions from the audience. If you could just take 5 minutes in answering them. One of the questions was, what are the challenges that you foresee organizations having to deal with, especially because of the integration of the India stack?
I don't fully understand that question.
So the challenges that organizations have to deal with the integration of the India stack, right? Especially the payment and the data layers. What are
Yeah.
some of the challenges that you foresee organizations having to deal with because of that integration?
So I think I would reframe this as an evolving ecosystem. I think right now for the data layer there is Sahamati as a players union that brings together various players of the account aggregator ecosystem. They're coming together to create procedural guidelines. They're coming together to create discuss business models, governance topics, etc. So I don't actually see these as challenges, but rather as an invitation to come to Sahamati if it's related to the data and the account aggregator ecosystem related challenges, where the industry can learn and b even participate in what the evolution they'd like to see in public digital infrastructure and private innovation actually delivering to these grand visions.
Okay. Okay. Well, thanks so much, Meghna. Thanks for sharing
And
your
sorry,
perspectives.
the other place, I think,
Mhm.
when it comes to the payments layer, obviously there is NPCI in place. When it comes to the data layer, Sahamati is the place to go and have this participatory discussion. When it comes to Oaken, there is an entity. Right, I haven't put in the website here, but please write to us at community@iSPIRT.in, and we will make sure that we set up the forums to have these uh, evolutionary development dialogues.
Right. Meghna, now because you brought up Oaken, there was another follow-up question that I had. With Oaken, right, do you see the P2P lending market scaling?
That depends on the market innovators that come in. Yes, there is certainly opportunity to do that as well.
Okay,
Today, it is set up as a lender and LSP language that serves the borrowers.
got it. Okay, well, thank you so much, Meghna. Thanks for sharing your perspectives. Thank you so much for answering the questions. It's been a pleasure to have you. Thank you.
Thank you. Yeah.